I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today is June 1st.
And today we'll be talking about mortgage rate updates. Where are we? When is the next Fed rate meeting? And are they going to go up or go down with that Fed funds rate? How many active listings are there? Are they up or down? If you're selling your home in this market, what are the chances that you're going to actually sell your home? And what cities in Phoenix are buyer's markets versus seller's markets? So here we go.
Remember, this is for informational purposes only. This is not financial advice. And if you like what we're doing here, be sure to subscribe, comment, and like. Give us a call. We'll be happy to help you with your loan scenario or answer any questions you have. And just where are mortgage rates today? Right here in the beginning of June, we see the 30-year fix at about 6.91%. This is from the Mortgage News Daily. It's a survey of all, a lot of lenders. I'm going to say all lenders, but majority of lenders in the country. We see at 6.91. The 15-year fix, we see at 6.33.
Yep, the 30-year FHA and the 30-year VA, about the same, about 6.59 and 6.58.
And we have said before that this is a survey. It's an average of what's being quoted out there by banks. And remember, Tom and I, we're right here in Phoenix, Arizona. We're mortgage brokers, and we have very, very good pricing. A lot of times, well, I would say almost all the time, our pricing is going to be lower than the national average because, again, we are mortgage brokers and have the ability to really go out there and get better rates.
Yeah, and we show
better service.
Yeah, and we show these more as a baseline. So as you listen to our podcast and as the weeks roll on, you'll know where we were from week to week.
Yeah, good point. All right. So the 10-year yield.
Everyone loves a 10-year, right? You go to bed thinking, what's the 10-year going to be?
What is the 10-year yield? The 10-year yield is what most banks, pension funds, world economies watch. It's the first mover. It moves it's primarily, for this conversation here about mortgage rates, it moves the 30-year fix. It moves mortgage rates.
Yeah, right. How much money do you need to earn in order to take a certain amount of risk? That is what the bond is measuring. And these investors are constantly saying, I'm going to need a little more money to take that risk. Or I don't need as much money this week to take that risk. It's measuring the risk reward of every investor.
Yeah. So we saw the 10-year yield hit its high towards the end of October of 2022. That's the recent history of this. And that's, of course, when mortgage rates hit their high as well, because mortgage rates are going to follow this and correlate very, very closely. So right up here, you'll see these two lines that I created, and you can see that it's a channel, and that the 10-year yield has been coming down overall, but it goes up and down, and it stair steps, down, then up, ricochets off of this channel, back down. This is about April 6th. We saw a real low, maybe with interest rates in the short term, and then we saw rates over the last month really go up. And then it was just last Friday, May 26th, where we see the convergence of the debt ceiling talks and all of the unknown certainties kind of maybe they came to a close of the unknowns about the debt ceiling, because now they're going to be, of course, signing this into law to remove it. And so we've seen rates come back down.
Yeah, we actually sat in Ed's office on Friday. We're like, where is this bond going to go? And we pulled out the handy dandy Mortgage Brothers, interest rate slide. And we said, well, if our slide is accurate, it's going to hit this top bracket and it's going to come back down. I was actually thinking that it might squeak above it, but it did kind of what we thought it would do. Now, that doesn't mean that we're fortune tellers, and it doesn't mean that it can't shoot right up above it, but it is interesting that it's staying within those slide brackets, both the top and the bottom.
Yeah, and so it might be a good month for in the month of June might be a good month for interest rates. We might see them continually to come down a little bit. So we want to show you that. Mortgage rates are obviously very affected by what the Fed does, whether the Fed's raising rates or not. And the next meeting is June 14th. And right now, today, again, it's volatile. We see these percentages change all the time, but there is a 64% chance, according to the futures traders, that there will be no increase.
Right.
And then there's a 35% chance that it will increase 0.25%.
Yeah. And I remember, just a month ago, we were talking, there's a 10% chance it's going to increase a quarter. Then it was 30% chance. And then it was, a 6% chance. And now it's basically saying there's the majority of people saying that there's not going to be an increase, which is amazing how these swings happen.
And we have the July 26th meeting and the September 20th. They're really you can kind of tell they're really not sure. Maybe an increase, 49% to 41% in those meetings, maybe 34, 37%. So there's really not really sure, but I would say it's kind of skewing for more likely maybe a quarter in the next 3 meetings, but possibly heading back down in November, the end of the year. And it's really the question is why does the Fed rate move down? Really, that's another podcast show, but something's going to, really cause it to move down. And it would probably be some type of economic hardship.
Yeah. And it's interesting, you can have an effect on the economy a couple different ways. One, literally changing the Fed funds rate. Number 2, saying that you might change the Fed funds rate. And I personally think what they're trying to do is they really don't want to increase rates, but they're telling the market, hey, we're going to watch the data. And if the data tells we need to, we will. So kind of, be aware that, if these numbers don't happen, you're going to force us to do this, even though we really don't want to. I don't think they want to increase it again, right? But they'll watch the data.
Okay, so right here in Phoenix, the Maricopa County, the Cromford Report median sales price is now showing through the end of May, $435,000 for the median sales price. And again, it's come up since January. The high there was set last May of 2022 at about 480,000. So again, we're heading back up and continuing to move.
And is this correct? So last week we had a 430.
Yeah,
so it's gone up 5,000, which is interesting.
Yeah, we continue to see it marching up. Active listings. We're really looking at this closely. In the last 12 months, the peak was October 23rd. There was 19,000, almost 20,000 listings. And everybody was thinking, or I say a lot of people were thinking, the listings are going to go through the roof. People, house prices are going to crash. But that didn't happen because after everyone basically put their homes on the market and whoever had sold, a lot of those investors, second home people, we saw inventory continually going down since October. And we are now at 10,783 listings active. And again, why? I think what we keep on saying it, people who do own homes have very low interest rates and they're not motivated to go trade it in for higher rates.
Yeah. So I'm going to say 3 things. One is, that was the holiday season. After October, people start buttoning up the hatches and getting ready for Halloween, Thanksgiving, Christmas. After the new year, spring arrived, but those interest rates started kicking up. People were like, I'm not going out and buying a home with these interest rates the way that they are. And then, some of the economic uncertainty just continues to be a little uncertain. So I am still very surprised at the low inventory number, but those are kind of my thoughts.
All right, and we're going to show you a couple slides here are kind of our thoughts. This is the listing success rate. If you're a seller out there, if you're either a seller now or you're contemplating putting your home on the market, what are the chances that you can sell your home once you put it on the market? Well, today the averages are saying that you have an 83% chance today of having a successful listing, or at least a successful sale, because that's what the real estate agents are reporting. All right. In 2022, we see about 64. At the end of 2022, we were all the way down to 64% chance of a successful sale. Earlier in that year, it was about 90. And all of 2021 was about 91%, 90% success rate. So really, really high.
That was it. That was the year.
Yeah, if you wanted to sell, boy, you could sell anything in 2021. And on this next slide here, this is the Cromford Market Index. We've shown this before, the 17 largest cities in the Maricopa County, and we can see that 15 of the 17 are really in a seller's market, which means there's more buyers chasing sellers. And there are 2. There's Maricopa and Buckeye are really, they're really close to a balanced market, because at a 100, if the value is at 100, you're at a balanced market between seller and buyers. But they're technically, below 100. And anyway, all these cities have seen an upward tick in the market index, which means they're all seeing more buyers moving forward.
And again, that's just because of the lack of inventory out there. If you had the same amount of buyers out there, but you put twice as many sellers, this chart would look quite a bit different.
All right, and this next slide is the contract ratio map. It sounds complicated, but basically this map shows you these colors. In the red right there, the red cities, these are actually broken down into zip codes. But the zip codes that are red are basically a zip code that has for every 1 to 2 contracts under 1 to 2 listings under contract, there's one active listing. So if there are 3 signs on your street, three for sale signs on your street, 2 of them will likely be under contract.
Okay.
And 1 remains active. I'm trying to show you these 4 zip codes. 2 are in Chandler. There's 85226 and 85225. And then there's Mesa. There's one that is 85202 and then Glendale is 85306. So where I have put these arrows right here, these are zip codes where it is in here it's 2 to 4. There's 5 listings on a street or 5 for sale signs. 4 of them will be potentially under contract and 1 is active.
This is like a riddle.
Yeah.
You ever like someone gives you a riddle and you're like, oh my gosh. Okay.
Yeah.
So, but the big picture is you're going to have the blue for cold, you're going to have the pink and the red for hot. But then if you have sizzling hot, the white, and you pointed out the white.
Yes, I'm trying to relate this. These zip codes are really, really hot. They're very, in fact, Cromford Report says that they're basically insane. It's
and I would
insane category.
I tell you, those are not the Mortgage Brothers terms. I wouldn't typically use those. Frenzy, insane, frantic, unbelievable. It's really funny that they use those words, but those are words from a professional organization, and it just means things are crazy. It's hot.
Yeah, so those are very hot zip codes. We'll see if other zip codes follow with that. Basically, using those same ratios is basically a lot of demand in those zip codes, and we'll continue to see if there's any others that follow.
Awesome, and we call that the contract ratio heat map. So stay tuned for the next heat map.
Yeah, be sure to subscribe, comment, like, give us a call if you have a loan scenario, anything that you want to discuss about your home purchase or sale, let us know.
All right. Thank you, folks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.